Who owns Britain? The government's emergency takeover of the country's last blast furnace from a Chinese company. And then the planned takeover of De La Rue, the company that prints British banknotes by a US private company. It got us thinking about who owns the UK and when does it matter? After all, every government for decades has tried to lure foreign investors here. It's one of the reasons the world is now so interconnected. But is that about to change? Last week, we had a wonderfully warm response when we recorded a conversation I had with Evan Davis from our sister programme, PM, about whether the US is being ripped off. So we thought we'd get him back into the studio, and he is with me now.
Hello.
Welcome back.
Thank you for having me back.
Now, when we think of this, who owns Britain, what's your answer to that?
Right, so look, it's going to be incredibly complicated and there are so many ways. Let's just take the simplest version of this, which is take the UK quoted companies, sort of stock exchange listed companies, London Stock Exchange listed companies. Those are most of it is owned by the rest of the world, not by us. Overwhelmingly, by the way, the United States, that's the biggest source of that foreign ownership. But most of our companies, they're not owned by us. So that 58%, and that's the simplest way of answering that question.
Okay, and can I just ask,
Yeah.
Is that the companies that are actually overseas companies, or is it the investors even in British companies?
Investors in British companies.
Right.
So foreign people can buy shares in British companies, and they bought lots of them. And in fact, they own most of them. By the way, we own lots and lots of shares in foreign companies. So, we'll get to this, but the balance is not very different. But it is certainly the case that, we don't own our companies. Foreigners do. I mean, Sarah, there's actually been, when we focus on companies on their own, and there's a lot more to Britain than just companies, but when you focus on companies, the massive and untold story, underreported story over the last 30 years is how insurance companies and pension funds, who were kind of half the investment in British corporate stock in the 90s, a bit under, they're now 4%. They own virtually nothing of British companies. I was taught at A level, it's all about institutions who own all of this stuff. And it took me to the 2000s to realise that world has just gone. They put their money into government bonds. They own very little of the...
because they're owning other people's things.
Yeah, well, there were some accounting rule changes and pension fund managers didn't like to invest too much in riskier assets. And there's been a massive change. I mean, there are people who say that, by the way, has ruined pension funds and has ruined British investment because you kind of, in a stroke, took out big British investors.
And you've got no lever to pull should you want to.
Yeah. But the truth is, we have got lots of investment in British companies and it's mostly coming from abroad. But it's, we invest a lot in our companies too. So that's the company side of it.
Okay. Does it matter?
Well...
Is the answer going to be depends who and it depends invested in what?
You see, the thing is, I think it depends what question you're on. You have to be... We kind of vaguely bundle up three totally different things. Who's putting the money up? Who's making the decisions? Who stands to gain or lose if the company does well or badly? Okay. Now, normally these are all bundled together, Sarah, right? I buy the company. I make the decisions as to what the company's going to do. I get the profits if it does well. The decisions, the profits, and the funding, they're all bundled up in one thing. But you can easily separate those things out. You could borrow money to buy the company. So I haven't provided the money, I borrowed it. But I'm going to make the decisions and I am going to get the profits, or it may be that someone else is going to make the decisions, but I'm going to get the profit. You can separate those things out.
Okay, but if you're thinking about, and I mean, the government has typically brags about money that's coming in and investing in the UK. Yeah. If you have a company, and it could come from anywhere, and it wants to put money, build a factory, employ British workers, bring skills, sell from here. I'm naming all what I imagine are the good things. Is the bad, one of the bads, that any profit goes back to headquarters in some other nation?
Okay, so the question is do you want foreigners to invest in your country, create jobs, incomes for people employed there, and the like? I mean, there aren't many people who say no, thanks. We don't want foreign money, because most of that is a good outcome. They will take the profits offshore, but the workers who are working in that factory or that company, they'll get their wages. So it's generating value for the economy. So I don't think that's a bad thing. And here, I think we come to the nub of a sort of massive contradiction in people's thinking about this. The contradiction in people's thinking about this, which is by and large, people say it's very good to have investment, foreign investment coming in. And then they simultaneously say it's very bad to have foreigners controlling things in our country. And you're like, those are both the same thing. If the foreign money comes in and creates a factory, or the foreigners come in and buy a company and run it well, that they're controlling a piece of your economy. I mean, that's...
Okay, I suppose until you get to something like the situation with British Steel.
Right.
So there are some things, and presumably, I mean, perhaps it wouldn't have mattered if there were lots of blast furnaces. When suddenly you get to the last one and some people are worried about motivations for actions, that's when you start thinking, oops, should we have allowed them in?
Okay, so let's go through the balance sheet on foreigners buying our companies. Creates jobs, brings money in, probably brings in good management. That's why they buy the company, because they think they can manage it well and make a profit from it. There's all of that. Ties your companies to, if you like, to networks of international companies. So your company is probably now slightly better internationally connected, learning from what the Japanese are doing or the Chinese or the Americans. So that's the plus side. The negative side is they do then make the decisions. People who are not in the UK make decisions about which will be affecting your country. And I guess, Sarah, most of the time we don't really mind that, do we? I mean, do we mind? Because they're making decisions as well or badly as any British person might.
They're going your interests are aligned.
Yeah.
Okay, so can you help me with something? Because in justifying the US tariffs last week, so what the US buys from overseas, President Trump's trade advisor, Peter Navarro, also wrote in an article in the FT, talked about the things, and then he said, foreign interests have taken over vast swathes of US farmland, housing, tech companies, and even parts of our food supply. Now, I was thinking, well, that's got nothing to do with the trade deficit. That's actually moving on to what we're talking about.
Right. So he's making a correct point. I mean, I think there's muddle in some American thinking about whether you want foreigners to invest or whether you want to keep the American economy American. Put that aside. He is making a correct point. If you run a trade deficit, if you're buying stuff without selling something at the same time to pay for it, so you've got a trade deficit, somewhere the money for that is being lent to you by foreigners, or it is you're selling something like a farm, or somewhere you're having to raise the money to pay for those foreign goods that are coming in. And usually that will mean your trade deficit is being financed by foreigners increasing their claims on your country. They'll be buying your government bonds, so you now owe them money that you would have been owing your own citizens, or they'll buy your farms or your houses, and that's how the money is coming in to pay for the goods that you're importing and not selling corresponding goods for. So it's
but if you whack tariffs, on goods that are coming from overseas, and you say, look, we want the factory here. Look, and they might name a British company and say, just come and make it here. Then suddenly that British company in the US is owning a swathe of whatever it is, the factory. So isn't it directly contradictory with what one of the purposes of their tariffs is?
Right. So yes, I think that is probably right. Yeah. I mean, if the world starts investing in the United States,
which is what they want,
that will mean the world is making more claims on the American economy. It will probably mean, by the way, there's a trade deficit as we pour resources in. I mean, it will just, yes, is the answer to that. The way round it for for Peter Navarro would be for Americans to spend less on Chinese products and to spend more on building factories in their own country. But in a funny kind of way, that's not a very appealing pitch to the American people, because that's saying have less of the stuff you like and put it into building making your own shoe factory.
But if you were trying to make a decision in a boardroom as to where I'm going to invest, and these tariffs are making me think I have to invest in the US, you'd be put off by that because you'll think, but I'm a foreigner.
Yeah, well, I wouldn't be put off. I would make a decision, for or against on all the evidence in front of me. And if too many of us start investing in the United States, if too many of us do what they've told us to do, invest in the United States, we'll be buying dollars to buy the factory in Ohio. We'll push up the dollar, and then that will bring in imports, whatever the tariffs you've got. That'll make imports cheaper, and everyone will be buying imports. So it'll just end up in pushing up the trade deficit again. So I think there is a contradiction between saying we want foreign money to come in to invest, but we don't want
foreigners to own it.
And we don't, you're not quite going to get there, I don't think.
But I imagine we're going to be wrestling with this quite a lot if there are certain conditions, for example, imposed on Chinese access to European markets, which is one of the suggestions. Are there things that the government could do, for example, by saying, look, we want your investment, but you can't be more than a 50% share?
Yeah, we can do all of that.
But we don't.
Well, we on the whole are fairly liberal. I mean, look, I think it's very important to say the UK is unique in the G7 and really unique among bigger economies in the world in how open it has been to letting people buy stuff, particularly companies, take them over, sell them again. We are so
railways, water companies, nuclear power.
What actually is the situation? Because I think we should get beyond companies when it comes to who owns the UK. We talked about, foreigners own most of our companies. Foreigners own about 5 times our national income in British assets, and we own about 5 times our national income in foreign assets. So there's a very small difference between how much they own of us, how much we own of them. But these are enormous assets they're more than just farms and houses. These are, government bonds, all these kinds of things, shares in companies, portfolio investments in companies, and and private debt. I mean, we own an awful lot of the world. The world owns an awful lot of us. We are, because it's more than 5 times the size of our economy, the amount that foreigners own of us and we own of them, we are just way more open than everyone else. I mean, we're just way more open than everyone else.
Are we more vulnerable as a result?
Yeah, well, you can be. And developing countries are often if too much foreign money comes in, they become financially vulnerable because the money rushes in, and then if everyone changes their mood, it all rushes out again, like it did in the Asia financial crash in the late 90s. Foreign money went out. They're all in a...
Well,
but I don't think we're terribly vulnerable. I don't think.
Okay, well, not in the way, because also, I mean, China now invests so much more in Africa than Western nations. And there is a suggestion, a worry about the sustainability of the loans, and that there's an economic dependence.
Yeah. But of course, it's a two-way thing. I mean, if the loans get written off, that's China's problem, isn't it? They may be investing stuff and they're going to lose a lot of money on it. I mean,
okay.
I would worry about that.
So to come back to the UK, we talked about companies. Yeah. What about the rest of it? I mean, where do you see as sort of something that, I don't know, maybe a pressure point?
Well, to be absolutely honest, we know that high-end property in bits of London have been quite foreign-owned. We know that foreigners own a chunk of our government debt, which means we owe them money. They own our government debt. But it's kind of more like 15, 20%. It's not 50 or 100% of our debt. So I don't think we're in a terribly dangerous place. They own a lot of us. We own a lot of them. And this comes back to this, you can separate out control and money. And that's what the British government did when it came to Scunthorpe and Steel, isn't it? They said, I'll tell you what, we're really in control because we can pass an act on Saturday that says we're in control. And you, Chinese steel company, have no tanks to move in to collect, your blast furnace. So if we want to run that blast furnace, we're going to run that blast furnace.
But there are some who would say that is going to damage or has the potential to damage other people thinking, is the UK a good
Yeah,
place to
it
invest?
might do. And other people will look at what the British government did and say, was that reasonable? Was it capricious? Was it kind of, does that threaten my investment in a...
So the answer to the question of who owns Britain is everyone else.
Everyone has a piece.
But we don't mind.
Companies have a piece. But we have a lot of the rest of the world as well. So we are just entangled.
And there's no way of separating that entanglement, the interconnectedness.
I think it's difficult. But it would be difficult if your biggest industry was a financial investment industry in London. That is one of our biggest industries. That's what they do. They buy up stuff and invest money in other places and hope to earn a good return from it. So I think that is just probably Britain's destiny. And crucially, at the end of the day, if the asset is here, you do have backstop control, as the government proved. Look, what happened in Suez in the early 50s, NASA basically said, I'll tell you what, that canal we have in the Suez is ours.
Yeah, well, I hesitate to Panama, which isn't even the US,
Right.
but they're still going to take it back.
We tried to get it back, and it didn't go very well for us. And I was at a nuclear power station yesterday at Sizewell, and that's owned by the French. What actual real control do the French have of that? I mean, they run it on a day-to-day basis using British management at the plant who say, yeah, we talk to the French, but they don't kind of give us instructions. And if the French really tried to give instructions that seemed very at odds with British energy policy, I think Parliament would meet on a Saturday and say we're taking it back into our control. So those assets are ours at the end of the day.
Okay, so the ultimate lesson is just relax about it.
Well,
There's not much we can do about it.
well, we could do more about it, but do we want to say to foreigners, don't buy things in our country, don't invest money? Because foreign investment is sure as heck better than no investment, isn't it? I mean, so that's the if that's the choice, I think I know which one I'd pick.
Evan, you, like me over the years, will have sat in interviews where a foreign company is coming in and buying into something, and there will be a disquiet from somebody you're interviewing. They can't quite articulate it, but phrases like, we're flogging off the family silver, come up. There is an emotional attachment too, isn't there?
And I do think that's right. And I think interestingly, that bit is less around the foreigners making the day-to-day decisions, because their decisions in most cases will probably not be materially different from the decisions we would make. If you're German and you buy Rolls-Royce motor cars, you're just going to try and run it to make good motor cars, aren't you? I mean, it's not going to be that different. And maybe you'll take production offshore, but maybe the British management would have taken production offshore. So I don't think it's actually much about the decisions. I think it's that we want to feel we are in our identity. We have skin in the game with those things we think of as archetypally British. So we want to think if Rolls-Royce do well, we stand to gain.
What, that great British company that's actually owned by the Germans?
So I think there is a kind of a degree of heart in this as well as economics. And I don't think you should disregard that. Then you should remember, you can actually buy your share in Rolls-Royce by buying shares in the German parent in Germany. You can just buy shares in them and then you've actually got Rolls-Royce. I don't know what percentage of Rolls-Royce motor cars is indirectly owned by the Brits through holdings in German parents. So I sort of don't worry about it. But like the other thing is, if someone comes and says, I am buying your company, Rolls-Royce, let's say, a sort of archetypally British company, I'm buying it, we are going to get the money, or someone in Britain is getting the money for that company with which they can buy something. And you have to take that into account. So what are they going to buy? They might invest in a new company, which would be brilliant, or they might buy a foreign company with that, or somehow that money mustn't be forgotten. We sell the family silver. We don't have the family silver, but we do now have the proceeds of the sale.
Something more useful, possibly.
And where I think you have to worry, there are two. I think you really have to worry if your market is somehow temporarily depressed and everyone's just coming in and buying all this stuff at knockdown prices. And you have to ask yourself, why would the market be mispricing it or underselling. I think you also have to be a little bit worried if you're the only country in the world that lets people buy stuff, because you might find yourself
More exposed.
you might just find yourself too many people are buying your stuff and there aren't enough job opportunities for British chief executives, and that somehow you're not really controlling anything because you've handed it all away. So I'm kind of in favour of a balanced ecosystem. I wouldn't want everything to go, God forbid, but I also don't see it as all going. I mean, I personally, I worry more about, are we creating new stuff that anyone would want to buy? That's really the thing I would like us to be doing well.
Well, that was me and Evan figuring it out. If you have an economic question that you would like answered, do let us know. You can email us at worldat1@bbc.co.uk or send us a message on Twitter, on X, either to @Sarah_Montague or @EvanHD. Thanks very much.